So today I'm going to be talking about the only 2 candlestick pattern you should ever trade. And I know that there are a lot of candlestick pattern. There are a whole lot of it. Okay, about 101 candlestick pattern. But I've narrowed it down to just 2 candlestick pattern that you should ever trade. And if you look at these 2 candlestick pattern well, you will eventually understand that these 2 is actually one candlestick pattern if combined. Okay, I will not go into that here, but I'm just going to make it easy for everybody to understand. I'm going to just classify it into 2. But actually, both of them are literally almost the same thing in a higher time frame. Okay, now most people actually, when they make the analysis, let's say you are trading support and resistance. So let me look for a region here. Now, before I even proceed to that, I should tell you the 2 candlestick pattern. Okay, now the major 2 candlestick pattern I'm talking about, the first one is the hammer candle. Okay, and it's basically like this, the shape of a hammer. The hammer candle, it has the shape of a hammer. This is how the hammer is. Okay, and what you should actually understand is how this candlestick is formed. What actually formed this hammer? How was it formed? We know that candlesticks is an interpretation of time frame, and each of the candlesticks you are seeing here is basically interpreting what happened in a particular time frame. So what is actually the interpretation of this? What actually happened? How did this hammer candle form? Basically, we have 3 parts of a candlestick. You all know that. Okay, we have the body of the candle, okay, the wick, okay, and the wick is divided into 2 other parts. We have the high and the low for a bullish candle. Okay, so these are candles. So a candle have majorly 3 parts: the body, the wicks, the open and the close prices. Okay, well, the open, the close, the body, and the wick. Okay, so you're going to see that. Now, when a candle opens, at first we don't know if it's going to be bearish or bullish. Okay, now if this candle goes below the opening price, becomes a red candle. Okay, why? If it opens and it goes above the opening price, it becomes bullish. That is a bullish candle. Okay, this is the basis. Now, during the course of the formation of this candle, let's say the candle opened here at a price here. So let's say the price was somewhere here. If you look here, you are going to probably see prices. Okay, around this side, this 1.28600. So that's what I mean by prices. Okay, so if you look at it, you see that the candlestick was opened at what? This price. Okay, and if it goes up, like I said, we have a bullish candle, and if it goes down, we have a bearish candle. Now, during the course of this formation, during the time frame for this candle, let's say this was a 1 hour candle, within the hour, if this candle came down, okay, to be bearish, okay, that is within the hour, let's say 40 minutes, 50 minutes, and before the ending of the 1 hour, it goes back up, then we are going to have what? A wick here, okay, and since we said if the candle goes up or close above the entry price, is bullish. Do you understand it? So if this candle was coming down here initially, but closed bullish by the end of the hour or before the end of the hour, okay, it closed above the opening price after coming down initially. Then we'll have a bullish candle. This is how the hammer candle was formed. Are you getting the point? This is how the hammer candle was formed. So what does this tell you? What does this interpretation tells you? It tells you that initially, when the price opened, okay, when the candle opened, the sellers tried to push it down. Okay, the sellers tried to push it down. But before the closure of the candle, that is the end of that time frame, the candle was able to come back up, okay, and close bullish. So that shows that the buyers were able to push this candle back up to make it or close it bullish. This is how hammer candle was formed. And this is how or why it's actually important to us, or why it became important. Okay, because it shows that the buyers are having momentum in the market. The buyers have strength. They are gaining strength in the market. Do you understand it? So this is how the hammer candle was formed. And this is one of the major candles I want you to look out for, or one of the candles that you could trade. Now, the reverse of it is something they call a shooting star. You don't really need the name, just understand what's actually happening. The same logic, the same thing happened. So the price opened and the buyers attempted to push it up. But before the closure of the candle, the sellers were able to push the price down, back to the opening price, and it closed below the opening price. So it's now become a bearish candle. So the reverse hammer, which is known as shooting star. So what this was showing you, or this is showing you, is that the sellers are now in control. Okay, they had more control because they were able to push the price lower to make it close bearish. Okay, so this is for the hammer candle, and this is one of the major candle that I can tell you that, okay, you can trade this if you are trading probably support and resistance or just the normal price action. Okay, that is number one. That is the hammer. Now, why the second one is the engulfing candle. Okay, so the engulfing candle, and if you look at it, we have the bearish engulfing and the bullish engulfing, and we'll talk about it. The bullish engulfing is probably is when a bullish candle totally engulfs a bearish one. So if this was a bullish candle, this was a red candle, this would have been a bearish candle, and this is something we call a bullish engulfing pattern. And what message does it send? Initially, let's say this market was probably coming down and it got to a zone where we expect to take a trade. Because I want to tell you something about this candle. You can't just be trading them anywhere. There are specific zones which you have to trade, which I'm going to tell you about. Okay? And the sellers were pushing the price up. And what happened? Suddenly, the buyers step in. Okay? They step in and they're able to push the price far above to engulf the bearish candle. Do you understand it? So this is why it's called the bullish engulfing. And now understand, like I said, it's not about the name of the candle, it's about understanding what actually happened. What happened is that now the buyers have stepped in and they are more in control now of the market. They totally engulfed the last bearish candle of that time frame. So this is how it becomes the bullish engulfing. So the buyers are gaining momentum, are gaining strength. Why the bearish engulfing is the reverse of it, okay? Why the sellers overshadow the buyers. So this would have been a red candle in the chart. Okay, so this is the bearish engulfing. And what message is in the sense that the sellers are gaining control of the market. And like I said, if you combine these two candles, eventually are going to produce a hammer. Okay, and we have a law for combining. Take the open of the first candle, the close of the second candle, and extend the wick. So if we take the open, of the first candle, which is this, the close of the second candle, which is this. So this forms the body, and what we do is just extend the remaining part, which is here. So we're still going to have something that looks like a hammer, which is not important. You don't have to, because that will give you a higher time frame. Okay, that will give you a higher time frame candle. So the major two candles I want to take note of is the hammer and the engulfing pattern, which can also be the bearish engulfing or the bullish engulfing. And we also have the reverse hammer. Okay, so these are the two candlesticks I want you to take note of, 1 and 2. Now, the thing is, most people actually get it wrong. It's not just about learning the candlestick, it's about knowing when and where to apply it. When can you say this candlestick is a pattern? Because we can't just be trading this candlestick at any point, any region. No. If we are going to lose a lot of money. So where exactly can we trade this candlestick pattern? Okay. Now, you can use this pattern during your support and resistance region or the trend line. Okay. So if you can find these confirmations, maybe a bullish engulfing at a trend line, at a trend line, or a good hammer formation, at a trend line, then you can actually say, since the market is in an uptrend and now I'm at the trend line, I'm seeing that the buyers are gaining control, I cannot buy the market. Okay, because you can't be using this pattern just anywhere in the market. You can't just be using it anywhere in the market. You're going to lose money. So you have to make sure it's at an area of value. When I mean an area of value, it has to be probably support and resistance video. Now, if you don't understand what support and resistance mean, or if you don't know how to trade support and resistance, I have a video on that, which the link is going to be in the description for this video. So go to the link and check out for the link that is talking about support and resistance, and go and watch the video to actually understand, because I wouldn't be able to go into much details about that in this video. Why the second one is also, you can use it in the trend line, and there's a video for that already, and you can also check that out in the link in the description. Once we see this in our area of value, that is our trend line or resistance zone, then we can now say, we might, or we could actually take this. And I'm going to show you a live example. You're going to see it for yourself. So this is the criteria. And now there is even a better way of trading it. Because there are sometimes it could fail. This candlestick pattern is even stronger if you can combine it with a chart pattern. okay, preferably the double bottom, okay, or the double top pattern. Okay, so if this is at an area of value, let's say at a resistance zone, we have something like a double, okay, a double top here, and we'll find this bullish engulfing or the hammer, then we are more sure to take that to put our stop loss below the zone and we'll target our profit here. At least it's more sure they are going to win that trade. Do you understand me? This is the way you can actually use this candlestick profitably, unlike what you are going to see online most times. So you can combine with a chart pattern, preferably the double top, double bottom pattern, or you can also use it in probably something that looks like a head and shoulder pattern, still at an area of value. Note, you don't trade these patterns alone at an area of values, and you don't trade this candlestick alone, except you see it at an area of value. Note that. Okay, so quickly, I'm going to go into a live example. Okay, and let's take a look at this portion. Okay, so where do we see? Let's look for something that looks like a resistance or a support zone. Let's see. Okay, so I'm going to go to a higher time frame because I don't really like trading in the lower time frame because it's too inconstant. As you can see, there was a support and resistance here. Okay, I believe you can see this. There was support and resistance here. Now, how or when could we have been able to enter each of these trade, any of these trade? When exactly could we have been able to enter it? Now, let's look. Let's zoom in. Okay, we look at this and exactly what do we see? I don't see a good hammer formation here. Instead, I see a doji, okay, which is an indecision candle. But then after that, what exactly did we see? We saw an engulfing pattern after this. Okay, there was no good signal here. And the doji is an indecision candle, meaning there is no decision between the buyers and the seller. That's what the doji candle, this candle that looks like a plus, shows you. Okay, but then going further, okay, at the support zone, note that I'm only looking for this at the support zone, at an area of value, like I told you. Okay, so we zoom in, and what do we see? We see what that here. Okay, the buyers actually gaining momentum. This bullish candle engulfed the bearish candle. So you can see we had a bearish candle, and at the end, the bullish candle actually engulfed it, even though not by much, but it's actually still an engulfing pattern. Okay, and you could have taken your trade at the close of the candle, put your stop loss just below the support zone, and watch the trade go up. Or you could decide to wait for more confirmation. Okay, so wait and see what the next candle is going to do. And what do you see? The next candle was also bullish, showing that okay, now buyers are actually stepping in into this market. It's time to what? To buy. So you could have taken this trade, put your stop loss below, and you see at the ending what happened? It went up. And even if you miss this trade, now just like I said, the double, okay, bottom pattern at an area of value. Okay, we see that the market made a retest to this portion, which there was also a mini support. And what happened after that was the market was attempted to start going up. Now, I could have not taken this trade here because this is not confirmation. No, I could have not taken the trade. Okay. Even here, I could have not taken the trade. But after that, what happened? We saw a hammer formation. Okay, we saw a hammer formation. And what does it tell us? That the buyers are actually stepping in. And if you actually read price action well, you notice that there was, okay, an equal low here. Okay, meaning if you go to a lower time frame to look at this, you could have seen the same thing I spoke about, a W pattern within a higher time frame double top, within another higher time frame, okay, support zone. Do you understand it? So this is crazy confirmation. So we had a support zone in a higher time frame, which you can see, which market have already made a move, and it came back to test it, which is a higher time frame double bottom. And within this double bottom, okay, we also had what? Another double bottom also, because if you go into a lower time frame to look at this double top, it's going to be exactly like a W pattern. So this portion. Okay, this portion. Hopefully we are going to be able to find it, but let me change the color. Let me change the color so that we'll be able to find it in the 15 minutes time frame. Okay, not exactly. Okay, so you can see it. So let's go to the 15 minutes time frame to look for that zone. So I could not access it in the 15 minutes. Let's try the 30 minutes. I just want to show you that there was a double bottom there. Okay, so let's try it in the 30 minutes time frame. You're going to see that there was surely a double bottom pattern there. Now, what do you exactly see? Within the region I marked, you can see that there was what? A double bottom, just like the way I said. Okay, there was what? A double bottom here. Okay, and remember that this double bottom was within a higher time frame double bottom also, which was within a higher, the same time frame, that is the 4-hour time frame support zone. This is enough confirmation. Enough confirmation. And after that, we saw a hammer candlestick. This is enough reason to take the trade if you already missed it at this point or this point. So you understand it. Now, this is one of the major candlestick patterns I'm looking at. And even at that, the market still gave you other entries. Okay, there was an engulfing pattern here which could have also entered, although it's a late entry. The stop is going to be wider, but that is also an entry which you could have also used. Okay, so this is one major candlestick pattern you could trade: the engulfing pattern or the hammer candle. Okay, now if this was happening here, if this happened, okay, here, okay, because this is too far, I can't be taking the trade here. But if this happened somewhere here, okay, somewhere here like this, I could have easily taken this trade, put my stop loss below, and probably target somewhere here. Probably take partials depending on your management skill. You could have gone break even or taken partial before the market eventually reverse. Okay, so this is now, time will not permit me to go through many examples on this. Now let me check out for a trend line example still to explain this concept I'm explaining. Let's look at NZD USD. Is actually in a beautiful trend. Okay, but how could I have entered this trade? What would have made me enter each of these trade? Okay, we have to find the most number of touches, which would have been here. Okay, what would have made me enter each of these trade? Okay, so this was the first two touches, which would have probably helped us draw the. So this was the first two touches, okay, which have helped us draw the trend line. Good. So if we go further, you see, how would I have entered a trade at this trend line? How could I have entered a trade at this trend line? Okay, so let's zoom in this and see what actually happened here. Was there a good reason to enter a trade here according to the candlestick pattern I told you about? Not exactly. Okay, not exactly. Not exactly. I don't see a hammer, and the engulfing pattern came quite late, so I cannot be entering here. It's already too far. So let's go further. Okay, is there a good reason to enter a trade at this point? Exactly, there is. Okay, there is a reason. Okay, and that is one, because one, this formed something like a chart pattern, which is still double top, like I told you. After that, what do you see? We saw what? A very good hammer. Okay, at this point, a very good hammer at this what? At this zone. Okay, so I could have easily taken my trade here at the close of it, put my stop loss here, and allow the trade to run. And I've seen that you'd have been in massive profit. And after that also, was there another reason to enter a trade? Yes, this was still regarding, okay, so this support zone that was formed here. And the market did this, came back, and also gave us a good hammer formation. We should have also entered a trade, put our stop loss here, and also would have been able to ride the trend up. Okay, so two things we are looking for. We're either looking for the engulfing pattern, okay, or the engulfing pattern or the hammer. Okay, and if you look here, you can also see the engulfing pattern. Okay, which if we look, if you entered here and your stop loss was here, let's see, would you have been taken out? Maybe almost, depending on how close your stop loss was. So if your stop loss was here, you'd have been taken out by this move. If it was a little far back, you'd have been taken out by this move, and you'd have gotten another entry at the closing of the candle. So this was a good engulfing pattern which we would have used. Okay, should have used to enter a trade at the close of it. While if that didn't work, would have also used this pattern or this. So you see there, you had several opportunities to actually enter this. I've been riding the trend now, riding the trend back up. Okay, so these are the only two candles, but I can guarantee you that if you use it properly, okay, it's going to what? It's going to make you money. If you actually use this pattern, okay, properly, it's going to make you money. Why? And the engulfing pattern. Okay, the engulfing pattern. So these are the two candlestick pattern I want you to be using in your trading, especially when you are trading support and resistance or trend line or your basic price action. All right. Now the other thing you should consider while using this, like I told you have to also consider the trend. Okay, you have to consider the chart patterns that is being formed, and all this information I've been given in my previous video about support and resistance, which the link is going to be in the description, and also the trend line trading video, which the link is going to be in the description also. So I sure to go through that video so that you know how to apply each of these candlestick way to improve your success. Now, this is for today's video, and I can see it took me a lot of time to also make this video. So please give me a like and drop a comment to the comment section to enable this video go to other people that might need it as well. Okay? And don't forget to subscribe. Peace.